China is plunging into a severe unemployment crisis. In the past, China had been known as a global manufacturing hub, attracting companies such as Samsung, Apple, and Foxconn. Recently, though, there have been some drastic changes in the economic landscape, which has naturally led to changes in the job market. For Chinese workers, this, unfortunately, means that a vast sea of uncertainty lies ahead of them. As unemployment rates continue to spike, hitting a record high in May of this year, China's private sector, which happens to be the largest source of jobs for its 1.4 billion people, continues to struggle. Despite Beijing's urging for a post-coronavirus economic recovery, many young people remain unemployed. So, today, we're going to have a look at the complex web of issues surrounding China's unemployment crisis and why companies such as Apple and Foxconn continue to diversify their manufacturing operations away from China. Let's start with Apple and Foxconn. For years, China had been the global manufacturing hub for several Western companies. In the past, the relationship was mutually beneficial, and companies got access to China's large workforce, low production costs, and extensive supply chain network. China, on the other hand, benefited from a significant increase in its GDP, along with the creation of new employment opportunities that managed to lift millions above the poverty line. A similarly mutually beneficial arrangement was made between Apple and China, which, until now, seemed to work well for both involved parties. This was until December 2022, when Apple announced plans to accelerate shifting production and manufacturing outside of China. With this announcement, the future of Apple and China's relationship was marked as having gone sour for good, as Apple looks at India and Vietnam as potential replacements for the dominant spot that China occupied on their supply chain. This strategy of de-risking needs to be analyzed further. One of the first and most important questions, one that neither China nor Apple have given a clear answer to, is why? Apple's diversifying supply chain. To gauge a clear-cut answer to these questions, we must focus on three things. Firstly, we need to see Apple's aversion to China as symbolic of a greater trend in the global supply chain as a whole. Remember, it's not just Apple that's looking to minimize its operations in China. Foxconn, a primary partner in Apple's production and headquartered in Taiwan, is similarly seeking to diversify its manufacturing and production in Vietnam and India. Similarly, in 2019, Samsung shut down its last factory in China and opened up the world's largest mobile factory 3 years later in India. Huawei, too, has similar plans for relocation. Secondly, there's a wide array of geopolitical factors that come into play in determining the relationship that Western companies have with China. As you may already be aware, China and U.S. relations have been rife with uncertainty and turmoil. As the political relationship between these two nations continues to stumble and deteriorate, it's only natural for Western companies to reassess their positions in China and look for alternatives. Thirdly, we need to talk about money. Let's face it, as far as multi-million conglomerates such as Apple and Foxconn are concerned, there's a lot of money to be made and lost with every decision. Now, with that being said, we are going to look at these three aspects of Apple and Foxconn operations in China, and hopefully that'll clear up some doubts about the situation. Apple and Foxconn jumping on the diversification bandwagon. Seeing how Apple might just be the biggest company and brand in the world right now, it doesn't take a lot to see how news of Apple and Foxconn relocating created strong ripples all over the world. Apple and Foxconn, while major players in the global distribution and supply chains, were actually not the first companies to decide to diversify their operations away from China. One of the first companies with the foresight to see the necessity of pulling its operations away from China was Samsung. Way back in 2008, Samsung made the strategic decision to relocate from China to Southeast Asia, with a focus on Vietnam and India in particular. Back then, the US and China relationship was not as politically turbulent as it is today, nor did the company have any clue about the economic crises perpetrated by the COVID pandemic. Still, despite the apparent stability that the Chinese supply chains had back then, Samsung took a risk. Taking their cue from the increasing labor costs and the intense competition from local smartphone companies, By 2019, Samsung had shut down all production and manufacturing in China successfully. Not only did this move save the company from geopolitical turmoil, the Trump-era tariffs on Chinese goods, and the COVID pandemic, but it also saw a new trend emerging on a global scale. Seeing Samsung's success, companies such as Apple and Foxconn decided to follow suit. But unlike Samsung, their journey wasn't as easy as you'd expect it to be. Trump, turmoil, and diseases. We certainly won't be the first ones, or the last, to say this, but 2020 was a terrible year. For companies such as Apple and Foxconn, the terrible aspect of the year was only amplified by the onset of the COVID pandemic. In addition to the tariffs that Trump had imposed on Chinese goods, manufacturers had to deal with devastating losses as a result of major breaches in the supply chain. Where once manufacturing in China had offered companies the advantages of low production costs and a large workforce, quarantines and tariffs saw these advantages being stripped away. Beijing's heavy-handed approach to COVID was, in itself, a huge red flag for companies looking desperately to return to pre-pandemic production and manufacturing numbers. With each passing day, it became abundantly clear that it was no longer financially lucrative for companies to manufacture in China with all these restrictions in place. In addition to the devastation caused by Trump and the pandemic, tensions between the US and China were, and continue to be, at an all-time high. It seems that any minute tensions between the two nations could escalate into full-blown conflict. Naturally, the possibility of conflict erupting results in companies looking into their contingency plans and minimizing their losses. Foxconn CEO Young Liu said it best. Hopefully it will not happen, but we have to be prepared. As you can imagine, this preparation consists of moving manufacturing to India and Vietnam, and for Foxconn, to turn its attention away from phones to electric cars. In addition to political turmoil between the two countries, Foxconn and Apple have experienced turmoil on a more local scale as well. Last year in the Foxconn Shenzhen facility, a violent worker protest broke out due to a sudden change in the terms of pay. While Apple did issue a statement, tensions continue to escalate. On June 9, 2023, protests of similar nature broke out in Foxconn's Shenzhen facility, where dissatisfaction amongst employees was rampant. Their reason was simple. They were being denied fair severance pay. In an attempt to stop the protests from turning violent, authorities were immediately notified until Foxconn finally agreed to the protesters' demands. Money matters. The past decades have seen China boast of unparalleled economic strength. Today, it's a different story. All the factors that we've discussed up till now have threatened China's economy and culminated in the weakening of the power it once held. As unemployment skyrockets, some Chinese youth have even turned to temples in an attempt to fix the country's stumbling economy. Most analysts were holding out hope that once the country got back to normal, which is code for pre-pandemic times, the economy would somehow fix itself. But seeing the reality of the situation, the dire need for better reforms and incentives becomes all the more obvious. Perhaps a better way of understanding this would be to assess why companies such as Foxconn and Apple moved to Vietnam and India. Once again, the answer to this can be found in Samsung's shift away from China. In China, Samsung paid the standard 25% tax rate, but in Vietnam, this number dropped from 25% to 10%. Additionally, while China once had the world's largest workforce, this is no longer true. Not only does India have cheap labor and low production costs, but it also has the world's second largest smartphone market, which continues to grow as we speak. Apple and Foxconn realize the possibilities that India and Vietnam have to offer, which is why it's unsurprising that Apple's long-term goal is to ship 40 to 45% of iPhones from India. Compare this to the single-digit percentage currently, and you'll come to realize the massive scope of operations beyond China. Is there a way out? While things may seem dire for China right now, you should know that change is a slow and long process. It's still highly probable that China will bounce back from its slumping economy. In the meanwhile, companies need to assess their dependability on China for certain goods and resources and handle the situation with grace and delicacy. As always, we'll be reporting how this situation plays out. Thanks for watching. Make sure you keep an eye out for our next video.